Welcome to the Daily MBA, where business wisdom is served fresh and fast, straight from one of the top MBA programs in the world. I'll give you summaries of my lectures and readings, as well as the most important insights gained from an MBA, so you can apply all of this knowledge in every business. Let's get started. On today's episode, I'm going to start talking about managerial accounting. And if you've been following up my previous episodes, you might have seen that I already talked about financial accounting. But my goal today is to explain why financial accounting is going to be different from managerial accounting, and I'm going to start introducing some of the topics that we'll be studying later in this set of episodes regarding managerial accounting. So first, we must understand that the goal for managerial accounting is going to be to provide information that will be useful for the decision making. But this information is going to be especially useful for inside managers, so mostly for planning the strategy in a company. While financial accounting is going to be the one that you're providing to external stakeholders, such as the annual financial statements or the stock market, because you are giving this information to others outside. So this is going to be the main difference. Managerial accounting will be towards the company, and then financial accounting is going to be directed outside. And so this is going to mean that managerial accounting will not be the typical stereotype of accounting that you might think of, because it will have different variables that are going to be affected. First one is going to be the audience, because as I was explaining, the managerial accounting will be mostly for an internal audience, mostly the internal strategy team, while the financial accounting one will be external. So it's stakeholders, creditors, talks, authorities, maybe auditors, so all of this. Then also, another thing that's going to be different, it's the purpose. Because the purpose of financial accounting is to do valuation mostly, and doing stewardship assessments when you are faced in the stock market, for example. But for managerial accounting, it's going to be, as I told you, to make decisions, so it's going to be a bit more strategical. Now, when we're looking at timelines, financial accounting has to be regular, so mostly it's reported by quarters or yearly, and it has a specific time that it should be presented. But when it's managerial accounting, it's technically future-oriented, so whenever you need for that information, you're going to get it, but it might also help to gather past data for historical reasons or just control, so it depends on what the managers actually want. Also, when we're talking about regulations, this is going to be different because financial accounting is going to be highly regulated, and if you watched all of my previous episodes regarding accounting, you'll remember all of the regulations that we were facing, but in managerial accounting, we won't have any regulations. The last difference, it's going to be the content that you may find in the report, because usually for financial accounting, you're going to have more condensed stuff, so it's going to be limited to some stuff that's just generally accepted, while managerial accounting is going to be extremely detailed, because here, since it's going to be for internal managers, they really want to know the detail of things. So, for example, in financial accounting, you might just see it as cost of goods sold, but in managerial accounting, all of those costs are going to be broken down. So that is going to be the main difference between managerial and financial accounting. And so this is going to be a guide into understanding what we really want to learn with managerial accounting, because as I was saying, this is going to be extremely useful for decision making, and so specifically for strategy formulation, operation, and execution. So decision making, as my professor said it, will usually involve like 3 different parts. First part is going to be the planning part. So in this, you are formulating all of the long-term and also the short-term plans in a company. And managerial accounting will definitely be very useful for this first step, which is planning. Second step is going to be directing. So when you are trying to implement all of those plans, you have to be directing people towards the right decisions. And also, this kind of means motivating them into what they have to do. And here again, it's also going to be very, very useful. And lastly, after you've already planned and directed, the last thing that you should do in decision making would be control. So you're going to be controlling performance on the one hand, but also you're going to be controlling on how your actual execution is comparing to your plan. Because most of the times, roles and strategy will involve replanning and new things that are going to be appearing on your way, either good things or bad things that are going to make you be flexible and change your initial thoughts. So good decision making is going to be by accumulating and evaluating information from managerial accounting that will be used mostly in these three parts. So now that we already know what managerial accounting is, you might think of examples of companies that are trying to use this. So let's think of one very first and obvious one, and it's when a company is planning to expand operations to another country or maybe even close operations from one country. This is going to be a lot of planning, and usually the company will be assessing all of the costs, the profitability, and things that are going to be leading up to this decision, and none of this is published until the actual decision is taken. So this might be a perfect example of how a company is deciding. A second example might be pricing decisions, because you might see that there may be opportunities in the costs or in the prices that might change, that might increase profitability, it might reduce the amount of clients. So all of these things related to costing and pricing methods may also be decisions that may be influenced by managerial accounting, because you are not going to be sharing with stakeholders all of this documentation. You're only going to do it internally, and strategically you'll analyze it in order to make decisions out of this data. So again, everything is going to be tied back to planning, directing, and controlling. And most of the decisions that we're going to see with managerial accounting may be split into three different categories, which were the ones that my professor presented to us. So the first one will be profitability. So how to understand revenue and cost and everything that's going to be related to this. The second one would be more like strategic decision making. So that will be budgeting and maybe planning. And then lastly, it will be controlling part. So evaluating the performance. And for this, we're going to learn different types of analysis, such as a variance analysis, or how you're going to be transferring prices or measuring performance. So these are going to be the three steps that you're taking in decisions, but technically broken down into the information that you're gathering. So profitability, then directing it into relevant costs and budgeting, and lastly, controlling it through performance evaluation. On my next episodes, we're going to start studying costs and all of the definitions that come around it. So I hope that after this episode, you already understand how managerial accounting is going to be an approach for achieving organizational goals, and how this one is going to be crucial if you want to work in a strategic role, maybe in a consulting role, or also if you just want to understand how decisions are made inside a company, because this is going to be the basis for all of these decisions. Remember to share my episode with other friends that might be interested in learning about business, and also give me a review if you think the content that I'm creating is useful for you. I'll see you next week.